Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every trading day. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 7:16 a.m. Central Time, and I'm recording this in preparation for Market Day, April the 15th, 2015. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. So let's dive in and see just what happened in the overnight session. Well, in terms of our own four broad market indices, we're up a little bit, and that bullishness has continued since this data was collected. So slightly up should lead into a positive open for our own cash markets. Crude oil up right at 1%. Euro down about 0.5%, though we do have the European press conference that'll be occurring in just a few minutes, so that could change that dynamic significantly. Let's see here. Bonds scratch and gold down just a tad. So for the most part, a very positive kind of night last night. In overseas action, China down about 1.25%. Hong Kong up just a little bit. Japan down just a little bit, about 0.2 in both cases. Germany up nicely, about 0.5%. United Kingdom up about 0.4%. In terms of macroeconomic reports for today, what we have for the United States, the typical Wednesday stuff in terms of the crude oil inventories. You do also have some other reports today, including Empire State Manufacturing Index, industrial production, a housing market index. So several kind of middle tier macroeconomic reports. Probably the big thing for this morning is the ECB press conference. That could be a significant influence on what happens at market open today. In terms of later in the week, tomorrow we have building permits and of course the regular weekly unemployment claims, housing starts, and Philly Fed manufacturing index, as well as natural gas if you are a trader in that market. We have a couple FOMC members speaking as well tomorrow afternoon, so there's always a possibility to shake things up from there. From a volatility standpoint, we obviously continue with this theme of very low volatility. You see the short-term VIX is now below a 12. You have the implied IV percentiles all down in the lower third, and maybe just a touch higher. So, for example, we've seen the Russell at a 0 in a couple days of recent. So it's up off of those lows, but this is still very, very, very low. Most important probably here is look at how many days we've had without a standard deviation move in any broad market index. That will come to an end at some point. Today being tax day, we do have a seasonality influence, and we start to have a bit of a bullish push starting with today and then into the second half of this month. So keep that in mind as well. You have OPEX is Friday. There also seems to be normally a bullish tendency into the options expiration as well. So that will be influencing you from a seasonality standpoint. From a market timing standpoint, we actually have a one-day outlook and three-day outlook of neutral. So I would put this and shade that just a little bit as neutral to very slightly bullish. If you had to flip the coin and you wanted it to come to one side or another, I would lean just a teeny bit to the bullish side. Now, of course, ECB announcements and stuff like that can very much trump any of those seasonality biases or market timing opinions. In terms of futures contracts, futures traders, you need to stay on top of crude oil. That contract should be rolling over in a few days. Probably Thursday, Friday is when you'll see the volume switch over to the new contract. In terms of investors, market trend intermediate term phase opinion still remains as phase 3. We're looking for that next higher. Portfolio investor posture, IBD status continues to be uptrend under pressure, so a warning sign there. GMI index also fell a notch last night to a 5 out of 6, so another warning sign there. Active trader market posture continues to be bullish and does continue to pick up some strength. We see all 4 broad market indices well up over 50. The Russell's up over 80, so that's actually very bullish. NASDAQ would be next, followed by the S&P, and then last the Dow. Dow is bullish, but is the least strong of the 4 broad market indices. It is, by that metric, okay to enter new short-term and intermediate-term bullish trades. Just keep in mind you do have a number of these warning signs that are coming back and forth. Our 2-week outlook is still slightly bearish. From a position sizing opinions, you still have the mixed messages with the investor position sizing opinion up to 50% and the active trader based on volatility metric of up to 100%. Hedge warning status remains slightly elevated at a level 1, and that's mostly due to the IBD status being uptrend under pressure, as well as a number of these warnings that we get from, for example, volatility. We've had that daily squeeze present on the VIX. We have still a high number of distribution days on the S&P and NASDAQ, 6 and now 7 on the NASDAQ, so that actually ticked up a notch. You have a number of the intermarket risk aversion indicators of concern. This last one still signaling risk off. The first one actually is right at crossing over, and at that point would go risk on. So a number of things there that is somewhat of a warning. Option income strategy opinion: VIX is inside the acceptable window, but in a daily squeeze. Consider position size. Also consider the impact of volatility. Watch that Vega on your option income strategies. We are likely to only go up from where we are now. Cover call strategy still fairly conservative, neutral, calling for a 2-to-1 distribution between in the money and out of the money. Put selling, I sold a number of puts in core portfolio positions yesterday, and will continue to look for opportunities to do so, but you should have caution given the current hedge risk level, and certainly in establishing new positions until a bottoming pattern forms. It's got to be position size appropriate, and not really putting yourself in any undue level of risk should this market turn south in an ugly way. And it could. I mean, that's what increased hedge risk levels tell us, is that there's an increased risk that this could break down. Sector market postures generally positive. Transportation's not in a very good place, and that is certainly also a warning sign to the bulls out there. You really want that transportation group to be strong if you're expecting a strong market. Also, telecom, technology, retail. Retail's been probably our most consistent story for many weeks now, and showing significant weakness. Obviously, we had some reports and some earning reports come out in recent days where retail was not faring terribly well. So that story may be coming to at least a pause, if not to an end. In terms of performing better, certainly consumer staples and healthcare, probably the 2 strongest sectors, and I would look for them to continue to be the more consistent performers. Notice those are both relatively low beta, and that might be also part of that. But not just about low beta. You look at utilities. Utilities very low beta, and yet performing very poorly as the interest rate environment might be in flux. Percent change on yesterday. You see energy had a very good day yesterday, and in general nobody really got crushed too much. Information technology down about 1/3%. Industry groups: retail, internet, healthcare, railroad, biotech continue to lead, and then transportation and pharmaceutical on this reading as the kind of second tier. that should take care of it for today. As always, greatly appreciate your own investment into what we are doing. Your encouragement does matter. And if you would, please like us on YouTube. And certainly we welcome your subscribing to us on the YouTube channel. Additional information if you would like it. And then, of course, the disclaimers. Hit the pause button if you need more time to review the disclaimers. And then we'll look forward to seeing you back here, same place, before the market opens tomorrow. Good trading.